better money choices. Choose a bank that takes your money seriously. Business Watch is brought to you by Nedbank.
The time is 1 minute past 2. It is Wednesday. A very good afternoon to you and welcome to this week's edition of Nedbank Business Watch right here on Eswatini TV. I am Notile Sitole, glad to be on your screens. Now, amid global trade uncertainty, Eswatini is looking west to strengthen economic ties with the United Kingdom. The year 2024 recorded an exceptional performance for the UK, with exports surging to over 2.6 billion emalangeni. For key insights following today's Eswatini UK Business Forum, we'll speak to Head of Trade at Business Eswatini on the Mozambique UK agreement and the opportunities at the disposal of Eswatini's business fraternity. Also on the program, the question may be, is 2026 shaping up to be a year of cautious easing, prolonged holds, or a return to tighter policy? And what data points will drive those decisions? To help us navigate the bigger picture, we'll speak to economist Anele Sibia on monetary policy expectations for the year ahead and what it could mean for borrowers, investors, and the broader economy. Also, because it's early days of back to school, Nedbank continues to drive the back to school campaign with tailored financing solutions for both parents and students. That's a conversation you definitely do not want to miss. But first, our business stories.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while Human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
And for our business news, the Minister for Commerce, Industry and Trade, Honorable Mangoba Khumalo, has urged the business community to take full advantage of the Mozambique United Kingdom agreement. The agreement now marks 5 years of creating expanded trade opportunities, driving economic growth and opening UK markets to local businesses. The Honourable Minister was speaking during the Eswatini UK Business Forum held at the Royal Villas in Eswatini. The forum is aimed at strengthening trade relations between Eswatini and the United Kingdom.
The United Kingdom remains amongst the top 10 export destinations for Eswatini products, benefiting from preferential access under the SACU+M Economic Partnership Agreement. Whilst we are encouraged by the growth in exports to the UK, we acknowledge that this trade is currently dominated by a very limited number of products and a limited number of exporters. We therefore urge our business community to actively pursue market diversification to fully exploit the vast opportunities that the UK market offers, because it serves a population of more than 70 million consumers and presents a very strong demand for very high quality and sustainable products across a wide range of sectors. I would also like to encourage the British High Commission and its partner agencies to consider programs aimed at capacitating local business people, particularly our micro, small and medium enterprises, to take advantage of the UK market. On the investment front, I want to emphasize that Eswatini remains open for business.
The United Kingdom has reaffirmed its commitment to helping Eswatini's economic growth and job creation. Speaking at the Eswatini UK Business Forum, the Commissioner, Colin Walls, invited local businesses to increase their trade with the United Kingdom.
Why does the UK want to see Eswatini exporting to British markets? It's simple. Growth is at the centre of the United Kingdom government's international domestic mission statements. We want obviously to see the UK economy grow, to deliver jobs and greater prosperity to British nationals and residents. But we also want to see Eswatini and our many other partners in an ever-increasingly connected world economy grow too. Expanding your company's exports into the United Kingdom market will, I hope, see you grow, resulting in you employing more Eswati into your workforce, giving them the powerful dignity that comes with working and providing for their family, and of course strengthening Eswatini's economy. The United Kingdom wants a strong, economically vibrant Eswatini. This year we are celebrating the 5th anniversary of the signing of the SACU UK EPA. EPA is Economic Partnership Agreement. This is the vehicle which will underpin how you can enter the UK market with minimal, if no tariffs at all, to contend with. The EPA demonstrates the commitment of SACU nations, including Eswatini and the UK, to trade with each other.
The United Kingdom is among the top 10 destinations for Eswatini exports, a clear indication that trade between Eswatini and the UK continues to strengthen. According to a report in 2024, Eswatini exported over 2.6 billion emalangeni to its top markets. This was shared by the Eswatini Investment Promotion Authority's Chief Executive Officer, Sibani Mgomezulu, who said the Eswatini-United Kingdom business relationship presents a strong opportunity for local businesses.
The UK remains in our top 10 destinations when you consider where we export to. And in 2024, the figures were exceptional. They've grown. We're speaking over 2.6 billion in emalangeni terms, trailing only behind South Africa. So with that substantial figure, we see opportunity and scope to increase even further. When you look at the exports to the UK, they are dominated by sugar, citrus, canned fruits, textiles, ethanol, and handicraft. And we want to grow. There are other products we are working with. We want to grow. We have ambitions, as we shared with you, Your Excellency, when we met with you, around exporting, cut flowers, tea, coffee, macadamia nuts, honey, avocado. There's scope.
And that is your business brief for this afternoon. After the break, we speak to Head of Trade from Business Eswatini, Musa Masego. Stay with us. Welcome back, and thank you for choosing to stay with us. Moving on with the program, Eswatini is stepping up efforts to deepen commercial ties with the United Kingdom. While the UK has long featured among the country's top 10 trading partners, 2024 marked a standout year, with exports to Britain reaching over $153 million. Today at the Royal Villa, the Ministry of Commerce and the British High Commission convened for the Eswatini UK Business Forum to strengthen trade links and spotlight opportunities under the SACU Mozambique UK agreement. For more on this agreement, we're joined by Business Eswatini's Head of Trade, Musa Masego, coming to us virtually. Mr. Masego, good afternoon and thank you for your time. Perhaps you could just unpack the SACU, Mozambique and UK, or rather EU Economic Partnership Agreement and its objectives for the Kingdom of Eswatini.
Thank you, Nozile, and good afternoon. So, in a nutshell, the agreement seeks to establish continuity post-Brexit. If I just take you back a little bit, obviously, when Brexit happened, we were trading under the SADC EU Economic Partnership Agreement. So we then, as a SACU bloc, together with Mozambique, began negotiations to continue the preferential trade agreement under the now what we call the SACU plus Mozambique UK EPA, which coincidentally today also marks 5 years since the agreement was signed and came into force. So this is actually a great occasion for us to actually sit down as the business forum and then look at how far we've come, but also what we need to grow and take advantage of this opportunity.
5 years since the agreement was signed, what have been the benefits that many of our businesses, local businesses, have been enjoying?
Like I mentioned, it really was about continuity and then obviously deepening the economic integration between the signatory countries. In his earlier remarks, the CEO of APA did highlight, for example, that our biggest exports to the UK specifically include sugar. And as we know, that is a big contributor to both employment as well as GDP. They are also players in terms of canned fruits. Surprisingly as well, a large part of our top exports to the UK have also been handcrafts. For us, this becomes particularly important if you're looking at the producers of handcrafts do tend to be women, particularly in kind of like the rural communities. So that allows them to also integrate into this global value chain. It's just, that opportunity to take advantage of the existing relationship the country has with the UK and deepen the economic integration.
5 years standing of an agreement, one would ask, how large does an enterprise or a local business need to be to realistically then benefit from the agreement or the opportunities that have been there and will continue to still be there?
No, so you see, that one isn't about size. Largely, I'd say it's about compliance. So as long as you meet the requirements that are in place, both the market requirements as well as regulatory requirements, size isn't an issue. But practically, of course, we are, competing in a global scale. So the larger businesses in reality do stand a better chance. This now then, speaks to their own internal competitiveness. That's why I'm saying it's really just a matter of compliance. Do you understand, for example, the labeling requirements? Do you understand issues of rules of origin? Once you meet those requirements, you are in a prime position to take advantage of the trade agreement.
If the agreement is currently more accessible to huge enterprises because of their competitiveness, what about the upcoming MSMEs that still need to scale in terms of exporting? What's the technical support or assistance for them then?
All right. So again, it's not just about size, it's really about export readiness. So you can be a small entity as long as you're export ready. You will be able to take advantage of the opportunity. And by export ready, obviously, I meant not only just compliance in terms of the product, but connectivity to the supply chains. Typically, what happens is a lot of the smaller businesses would use some form of aggregators that will then allow them to, send in bulk shipments. However, it doesn't necessarily mean it has to be a direct export. part of what the agreement allows for is what we call cumulation. So if I together, identify a number of players within the value chain, so that means I supply a company in South Africa that then does the final export. That will allow the smaller companies to still play a part in the integration, the value chain, and ultimately, this is what the agreement seeks to achieve on its development aspect. That's why, we're talking about liberalizing some of the rules of origin, so that you can take components, you can integrate the regional players, and this is why we negotiated this agreement as a SACU block, because we understand, looking at the way our economies are structured, in order to integrate some of the smaller businesses, this is the way to do it. And surprisingly, even some of our larger entities that are currently exporting to the UK do tend to use or take advantage of this cumulative agreement in, bringing together certain components that are needed for the manufacturing process, and ultimately it passes the rules of origin test, and we are all the more better for it.
Often there's economic disparities, Mr. Masego, for different reasons. But when you look at the agreement and where it stands currently, which sectors would you say are benefiting the most and which are currently not maximizing on it?
So when we're looking at the data, statistically, the agriculture sector is taking huge advantage of it. I've already mentioned the sugar. I've already mentioned some of the citrus products. We are looking to expanding some of our jams and sauces and condiments as well. It's then a bit difficult to say which sector is underperforming or underutilizing that. What we can look at it from is where are the biggest opportunities, and we have identified textiles, we have identified some of the handcraft markets, as I've spoken before. And really, what we want to do, yes, we're looking at product diversification, but also it has to be within the context of the competitive advantage of the country. So while at the moment it is dominated by 3 or 4, agricultural products, if that is where our competitive advantage lies, the idea is to diversify and perhaps adding, like I mentioned, the opportunity that we're exploring right now with the macadamia nuts and a few others. If we can scale that up, gradually as the years roll on, I think we will reach a point where we have reached optimal diversification. But at the moment is to scale up from the current, say, 4 big products to say next year, let's add another 2, let's add another 3, and then we'll start, strengthening the supply chains from there.
My last one, Gamano, would be that with over 2 billion in exports to the UK, what it says to me is that if we diversified well enough, there's really greater room here for us to scale and export just a bit more than we have. So where do then the local businesses need to strengthen or improve besides compliance to ensure that we then increase the uptake of the agreement or participation?
So looking at the discussions that took place in the business forum today, I think what we definitely need to strengthen is the issue of market intelligence. The agreement gives us access. So now what we need to do is to understand consumer trends within the UK. What are the products, what are the current consumer trends? And then our role, obviously, as Business Eswatini, would be then to, in exchange of information with our counterparts, it would be working with organizations like APA to organize those business-to-business exchanges. In an ideal world, this will be physical, but, we have to take into account, the cost factor of that. So even the virtual ones where our local producers get to speak to the buyers and really understand what products are they looking for. We already have mechanisms in place within the Ministry of Commerce and other government agencies that tackle the issue of export readiness and certifications through SWASA and all of that. But what the business community really needs to lean on is the issue of market intelligence and understanding at a deeper level what the UK market entails, and being able to tell our story, because it's not just the product, it's the story behind the product.
Amane, thank you very much for your time. We'll leave you here for today. Thank you for your insights. That was Head of Trade of Business Eswatini Musa Masego, sharing insights on the SACU Mozambique-UK agreement following today's Eswatini-UK Business Forum. Nedbank Business Watch continues after this. We're back with in-house economist Sanele Sibia. Stay with us.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
When you choose your adventures, you do so with an open heart and a desire for the unexpected. You embark on journeys to discover new worlds full of wonder. You choose a path to awaken your senses, a world to make you look up and realize just how inspiring this life can be. Arrive and awaken your heart. Explore life in ways only thought possible in your dreams. Discover just how far you go to expand your understanding of life's greatest mysteries. There's just one place on this planet with so much to offer. Now is the time for you to have the royal experience.
Welcome back, and now for our live discussion. The Governor of the Central Bank of Eswatini, Dr. Philip Mnisi, is expected to table his monetary policy statement this Friday. Last year, the central bank maintained the discount rate at 6.75%, keeping borrowing costs stable for households and businesses, while headline inflation remained modest, around 2.9% by late of 2025. And in 2024 and early 2025, the bank adjusted the discount several times in response to global and domestic conditions. But in 2025, it then held the rate steady to support economic recovery and price stability. Inflation has moved within a moderate range, remaining below earlier highs and allowing the bank flexibility in its policy stance. Today we discuss monetary policy expectations for 2026, and we're joined by economist Sanele Sibiya to explore what markets and households might anticipate from Dr. Mnesi's address this coming Friday, including whether rates will remain steady, responses to global economic pressures, and the outlook for inflation and growth for the year 2026. Mr. Sibiya, thank you very much for your time. So the central bank did hold the discount rate to 6.75% throughout 2025, just after several agreements or the adjustments in 2024. What does this period of stability then say about the bank's thinking when you look at what we should be anticipating in the year 2026 and going forward?
Thank you, Notsile, and a good afternoon to you and to the viewer. So when we look back to 2025, you remember that 2025 was marred with a lot of uncertainty, especially around the tariff threat. And, eventually we moved and we saw yet another threat coming through on that Venezuela story and quite a number of other macroeconomic instabilities that came through from the global markets. And then also when you look through what is happening in South Africa, we saw that South Africa somehow had a higher inflation compared to Eswatini. So now those conditions made it for the central bank to continue its accommodative but neutral state in maintaining, the discount rate as it were. So I think even right now, going into Friday, we should really not hold our fingers much for a cut, though the scope is there to see another interest rate cut, but it's highly contingent on what South Africa will do, because we can't have too much of an interest rate differential with South Africa, because that now then leads to capital flight.
Inflation ended 2025 at modest levels, Mr. Sibiya. Does that then give the central bank room to maybe start easing policy this year, or we should be seeing or expecting rates to stay a little high?
So regarding that story, yes, inflation has eased. But if you recall back in his midterm budget review, Minister Konongwana in South Africa lowered the inflation target to stay between 3% with a 1 percentage point diversion. So right now, as a country, if we were still on that 3 to 6% the range, I would have said we are going to see an interest rate cut. But right now, until and unless we know what the central bank is going to do regarding that lowering of the target by South Africa, we would then have that a bit of uncertainty coming through from that, until and unless we get a pronouncement from the finance minister and also from the governor himself. But right now, my thinking is, since we are now talking of 2.7, and we already have South Africa lowering the interest, the inflation targeting band, and we are part of the common monetary area, and we need to have synchronized monetary policy with South Africa. So I would say he's going to hold steady, because we are within those parameters. Under the old parameters, I would have said I'm voting for a cut, but right now we do expect him to hold it steady while we try to maintain inflation at that 3% level.
If rates are held steady from a household perspective, what would that mean for loans and for consumer credit?
If rates are held steady, there won't be any impact, because you're still going to pay the same interest rate that we were paying yesterday. But if there is a cut, then in terms of your repayments and the interest, it's going to be a bit lower. So now it's going to mean a bit more money in the consumer's pockets. And if they were to increase, which is highly unlikely, I'm just not seeing that happening on Friday, then that's going to be taking a bit of money from your pockets. So Friday, we should expect either a cut or a neutralization, but it is South Africa's story tomorrow that will give us a clearer inclination on what the governor is going to do.
Back to the conversation on inflation, the CBE forecast inflation at around 3.2% in the near term, but close to 4% in 2026 and 2027. What would need to happen for that outlook to change meaningfully so?
So for that outlook to change meaningfully, we would have to have yet another supply chain disruption like we saw during COVID, where we just saw supply chains being disrupted, and also the Russia-Ukraine war, again, caused yet another disruption there. And then right now, what we're looking into, there is the Venezuela story there, which might end up causing more disruptions. And there's also the Greenland story, which might end up causing more disruptions and then, pushing inflation through the supply side. And, we could expect some demand side inflation, but with the outlook and the negotiations, you really don't expect that there's going to be quite a market increase in terms of the wages and people's spending priorities. So in the short to medium term, I think the most immediate risks to that output would be, to that outlook would be, supply side shocks, and also, the geopolitical tensions that we might see coming through. But we do expect that as we head on to November and President Trump becomes a lame duck, so those are going to stabilize a bit for 2027 going forward.
In the monetary policy statement presented or announced by the governor, Mrs. Biya, back in November of 2025, non-performing loans remain elevated, that is year on year, to say. How big of a constraint then is financial stability in shaping this year's rate decisions?
No, financial stability is crucial, Notsile, in the sense that we need the banks to remain very much steady. And if you look at the financial stability index that the central bank publishes, it does show that we are actually on a good footing as a country. It seems to be, improving year on year. So what we really need to worry about going forward into the monetary policy trajectory, into the monetary policy meeting, the MPC, is how does the central bank see the future? Because remember, monetary policy doesn't impact the economy right now. It takes like 3 to 6 months for whatever interest rate cut that the governor does to start reflecting on inflation and people's spending patterns. So it's more a futuristic type of balancing approach. And, the future looks good. Right now, we're talking of a Langeni that hit the 1558 mark. That's a levels we've not seen in a long time. So that means we are going to see a reduction in this that comes through from outside, when we're importing a lot as a country. So we do hope to see a steady monetary policy, and actually for me it's more of a holding, it's more of a hold until we get a clearer direction in terms of that monetary targeting band, that inflation targeting band.
And when the governor speaks on Friday, what's the language that households should probably be on the lookout for with regards to where monetary policy is heading this year?
What we need to look out for is, optimism around issues of credit and optimism around demand and, accommodative monetary policy. So if you hear those words coming through, most likely it's going to show us that, to accommodate the growth that we need, the central bank is thinking positively around the interest rates, and that might mean they are seeing scope to cutting the interest rate. And, also that which you mentioned around the NPLs and the household sector, depending on how much for an emphasis is going to put on that, and it might actually be looking at the fact that households are really overburdened, at the current moment, and that actually shows even in the inflation numbers. When you look at those figures, those sectors that are pulling the numbers down, it's mostly the demands, the retail. It's more the hotel and accommodation industry. Now that tells you whether an economy is willing to spend or not, because if people are not going out, then that means there are severe cost of living pressures that they're contending with. But I think what the minister is going to do is going to hold this time. I don't necessarily see him cutting because of that change in South African monetary policy. And then he also needs to look around what the budget is going to be in February, and then thereafter start with accommodative monetary policy. So right now, my bet is we are going to hold.
Thank you very much, Mrs. Spear, for that one. We'll leave it here for today. That was in-house economist Sanele Sibia sharing insights on monetary policy outlook for 2026 ahead of the Central Bank of Eswatini's monetary policy announcement by the governor, Dr. Phili Mnisi, this coming Friday. For now, we'll go for a break. After that, we're in conversation with Nedbank. Stay with us. Welcome back. You are still watching Nedbank Business Watch, and we are still very much in the back-to-school spirit with Nedbank offering different financial solutions suitable just for you and your family. And now I'm joined by Mpumelelo Motsamai, who is the branch manager for Manzini here at Nedbank Eswatini. Motsamai, good morning. Good afternoon, rather. How are you?
Afternoon, how are you?
I'm good. So let's get to the conversation. I want us to unpack the financing solutions that Nedbank has for the different clients. But before that, I want us to perhaps get the understanding of why it is important for us right now to be focusing on back-to-school financial solutions by Nedbank.
Okay, thank you for having us. So for January, we all know it's back to school for our clients. So at Nedbank, we have these tailor-made solutions for them. It is important that our customers know beforehand that they have the help that they will need at Nedbank. So we offer them loans. There are two parts of loans they can have. They can have the LEAP loan, which is catered for specifically school fees. They can also use the facility for personal loans to cater for the school fees. But what is important is that they should know we are there to assist in order to help them take their kids' needs and everything that they will need for back to school.
You've just said it yourself that this month, especially this season, it comes with many expenses for parents. Perhaps you can then take us through some of the products that Nedbank has that just make, educational and transactions easier for families.
Okay. For families specifically, maybe we can start with the savings and investments. For us, at Nedbank, we have facilities where parents can save up throughout the year, putting in that deposit throughout the year from their salary. We also have accounts for students themselves where they can open, and the parents can encourage them to save throughout the year. Those monies can be used for stationaries, those little things that the children need at school. But for bigger things, maybe the school fees itself and the transport monies, they can utilize the investment account where they will deposit on a monthly basis to have those funds readily available by the time schools open. We have also the Nedbank Money app where they can transact at the comfort of their home. We encourage that because it's the safest option right there. And then we also have ATMs where now parents, when they're paying the school fees during this season, they can just use them any time of the day. They're open 24/7 and they're everywhere in the country. So it's convenient right at their doorstep.
The Nedbank savings account option, speaks to us rather, but why it's so important. Why should this be a priority option right now for families, for their children as well?
It is very important because it not only alleviates the pressure when you know you've saved up for something, but you know you'll be stress-free when you have saved something up towards the school fees, rather than rushing around getting loans and everything. But what we do encourage is the saving. You need to make sure that your expenses, when you sit down and draw up your expenses and budget for the year, you know, for the year 2027, rather, we start now saving up for your child, so that when January 2027 comes, your child is catered for in every aspect regarding school fees and everything. So it is important for them to know that we are there. We have those investment products, those savings products that can help them do that.
Right. My apologies there for the early interjection, but allow me to ask, are there specific requirements that are expected for parents or families when they want to open a savings and investment account, in terms of documentation that they need to bring, anything that they need to, any payments that they need to be aware of upfront, the deposit monthly, how much will they need to be saving and investing?
Okay. For the savings account, I will start with the savings account. We have you need to have your ID, your proof of income, your proof of residence. For the investment account, it's the same documents, but what is important there is that you set your own pace. You know, maybe in December, I want to have 12,000 for the January school fees. You can then do a stop order from your salary account to the amount of 1,000 each month. So both of these accounts, you set your pace. The investment one that I would like to speak to more is the Just Save account, where you can specifically just use that account for the school fees. It is flexible. You give us a 1-day notice, and then the following day the funds are readily available in your transactional account for you to use for the school fees and the school expenses. Yeah.
Household incomes are never the same, Bomelelo, and so are the expenses. But as Nedbank, as a bank, I like to say that you are a friend in a bank. What are some of the challenges that you see parents face and you realize this is actually something that can be avoidable, but we keep seeing this at least every January, at least every other 3 months, families are coming in and they require these type of services that you've decided we want to tailor a solution specifically just for particularly this income or particularly this issue that is so common?
For us, I think what is important that we normally tell our clients is that you need to make sure you plan ahead. You need to make sure you know your expenses. We tailor-make the solution for you. When you come into the branches or you seek assistance from us, we make sure that we tailor-make the product for you. We direct you to the specific product that will help your income base and the expenses that you have. So it is important to note that at Nedbank, the financial journey, we walk the financial journey with you. So the expenses, as you sit down, you have to be open and we will advise you accordingly to what you need, and the right product for you will be then opened so that you can cater for everything that you need.
And the students' account, talk to us a bit more about that one. How can students benefit from opening it and, of course, getting to manage their finances on the student account?
Okay, the student account, I like that one very much. It encourages the student to save, to know the value of money. For them to open a student account, they need if they're older than 18, they need their ID, they need their proof of residence, they need their acceptance letter from school, be it they're still in the tertiary or they're still in high school, because sometimes it happens you're over 18 and you're still in high school. And then for the minors, those below 18, they can then, the parent now needs to be involved. So the parent's ID is also required, the birth certificate for the child is then required. The parent becomes the signatory of the account. But what we encourage the student or the parent to do is that to help the child through the journey of saving, making sure that they understand the value of the product, so that tomorrow when they're adults, they know that money you save to spend, not just to spend anyhow.
And it's quite relevant now because we're starting out. They need to know that the very little pocket money that they
That
get.
they have.
They don't have to spend it, you know, recklessly. They can just save a little. Yes, perhaps snack on at school, but it's very important that you plan ahead, even as a child.
That is true.
And I look at the solutions. Mpumelelo, you have your student accounts, you have your savings and investment accounts, you've got personal loans as well. What makes all of these solutions attractive, really, compared to what any other institution can offer?
Okay. For us, I'll make an example of the student account. The student account doesn't have any monthly charges.
Okay.
So it's very attractive for your child. It only has a yearly fee, which has been revised to 56 emalangeni. But the child enjoys free ATM withdrawals, free swipes, then also the money app is accessible through that account. So if you have the child at tertiary, you can just send the money to the account without even worrying about the charges, because the child can get exactly the amount that you've given them to spend on the expenses for school. So that one is a very good product for students out there, because we all know they rely on their parents. So the charges should be kept at minimum. Yeah.
On the student accounts, I'd like to ask, it takes an 18-year-old can actually open an account and be a student account holder. So for as long as I am a student,
yes,
I qualify for this one.
Yes.
Say maybe now I'm able to complete my studies at 24. Just, you know, giving an example. Is it required of me to then upgrade? Or is the bank going to say, oh, you're no longer a student, that we need to offer you this type of solution? What happens then?
Okay, for that particular instance, you will find that you finished university and you are currently unemployed. You can retain your student account, because you'll still be getting your monthly allowance from home for those expenses that you need. But as soon as the circumstances changes, you can then come to any branch near you to say, I am now working, here's my contract, and then we convert that account into a transactional account for salary taking deposits. That would be your current account. So you are then migrated to the current account as soon as you are working. But if you are not yet working, you can keep the account, because you'll be receiving money from whoever is supporting you at the time. Yeah.
I understand Nedbank is also a digital bank. So allow me to ask, have you seen an increase with regards to uptake in the digital services offered by Nedbank?
Yeah, that is true, Notile. We have seen a recent rise in the money app, in the Mobi wallets, because people, truth be told, they like convenience. They need those solutions that they can use at the comfort of their home. And the era that we're in right now, we are moving to the digital, we are in the digital area. So people are more comfortable doing the transaction themselves in the comfort of their home, as opposed to queuing at ATMs and taking out cash.
The Nedbank Money app, how easy is it, you know, to maneuver around? Whether you're a first-time user or you're a returning user, now you've got transactions to make. How secure is it?
It is very secure. We've been told that it's the most simplest app that is out there. The features that we have, you can do transfers, you can do cross-border transfers, you can do transfers to other banks in real time. We also have the facility there to download your statement. You can download your statement. You can do your notice withdrawals. I talked about the Just Save. You can even set the notice for the Just Save on your app without going to the branch. So it is quite secure. With the settings of your phone, you can use a PIN. You can also use your thumbprint if your phone allows. So it is quite secure. It does regular updates like any other app, but it is very secure.
While we speak on security, I understand there's the element of two-step verification. Can you tell us a bit more about who that applies to, especially as a user of the app? Is it when I'm first time enrolling, or I've had a continuous deposits or transactions to make?
Okay, for the two-step verification, it applies upon enrollment. So when you first open your account, you go through the process of being enabled on the app. when you do that, you receive your profile number, and then you put that into your device, and then you set your own password, and then it sends you a PIN now to verify that is you. And it is important to note that that PIN that it sends to you, it only sends to the number that is registered when opening the account. So in that way, the verification, when we are verifying, we say it is you that is doing the app.
Right.
So it only sends to the number that you put down when you were opening the account. So that one applies on the first-time user.
Bumelelo, as we wrap it up, I'd like for you to speak to our clients, our valued clients, Nedbank clients, and our viewers as well. What's the message you'd like to send to them, the parents and the students as well, with regards to, as they prepare actually for the new school term, not only for the first term, but also I understand financial preparations need to be done for the rest of the year as well.
To the viewers, I'd like to say that ATMs are everywhere. We have ATM depositing machines in all our branches. We have Corner Plaza, Gables, Hub Manzini, main branch Manzini, Lifestyle, Matapa Lifestyle. We have Hlatikulu, we have Hluti. The ATMs are there. They're closer to you for your convenience. It is important that they know we are out there and that we are there to assist any time of the day. They are secure. They have security guards. Their security guards are also there to assist our clients. If maybe you are unsure on how to make a deposit, engage the security guard to assist you there.
Bumelela, thank you very much for your time. Nedbank is here for you for your convenience as well. That was Bumelelo Motamai, who is the Nedbank branch manager in Manzini. We were discussing some of the tailored solutions specifically just for you, families and students, as we are looking into the new academic year. This is Nedbank Business Watch. The show continues after this.
Digital helps you make cross-border payments. Human gives you global specialists. Digital allows you to apply for a loan anytime, anywhere. Human connects you to credit experts. Digital puts you in control of your money, while human connects you to wealth advisors. Digital allows you to freeze, unfreeze, cancel, and reorder your card. Human gives you that personal touch. Digital when you want it. Human when you need it. Get the complete private banking experience with Nedbank Private Clients.
Welcome back, and in our final segment for Nedbank Business Watch today, I'm joined by Toba Kamete, Treasury Sales Manager at Nedbank, for latest in terms of markets and today's trading day. Toba, thank you very much for your time. We're seeing the dollar weakening rather today. Why is that?
Good afternoon, Notsile, and thank you for having me once again. Yes, so we continue to see dollar weakness in the market, reaching levels of 15.8 and some change today. It's due to a number of things, continuing factors. The Fed's independence is one, and that is key. We're also looking at, markets sort of assessing and reevaluating President Trump's policies, as well as looming rate cuts or talks of rates being cut in the U.S. All of that has contributed to the dollar weakness that we're seeing.
With the Fed policy expected to come in this week, what are markets pricing in terms of the rate cuts?
So markets are expecting rates to be held unchanged this evening. There is obviously data that is supporting that. We saw employment numbers coming in actually lower than unemployment numbers, that is coming in lower than expected, showing that the U.S. economy, it still has still has a bit of a push. So that's why there's expectation that rates will not be cut, as opposed to a cut where then that would drive, that would sort of revive or drive activity in the economy. But yeah, it's expectations of rates unchanged this time around.
And when we look at equities, what are we looking at? Because I understand that the major tech earnings coming in this week. At some point we had fears of an AI bubble, but that is apparently not the case for now. At least, what are the numbers saying?
So equities are actually in the green today. There is obviously concerns as we look at the earnings that are being reported. Tech being one of the sectors where investors are, looking very closely to see if the earnings, the growth that we've been seeing is sustained, and that, as you've said, it's not a bubble. But there's also just a number of mega cap companies that are reporting their earnings as well, showing strong numbers. So that has sort of contributed to the strong performance of the indices that we're seeing.
Right. And moving on to commodities, gold also hit records. In fact, precious metals did too. What is driving this, metals or commodities to the green?
Yes, so gold hit 5,300 today, dollars against, dollars per ounce. So it's a number of factors. It's not just the uncertainty that's in the market, but that is one of the factors, but there's just also, a shift in global monetary fiscal policy order, from to a more cautious stance. That means, investors are then looking for safer options. So gold is benefiting from the dollar weakness that we are seeing in other precious metals, which has then driven emerging currencies, emerging economic currencies like the rand, and countries that export these precious metals gaining quite a bit of strength in their currency valuations.
The snowstorm, reports of a winter snowstorm that we saw this week, did that affect oil prices in the U.S. in any way?
Yes, it did. With the storm that swept through the country, it disrupted output of Brent crude in the U.S. So that has then disrupted supply into the market. So we've seen the price of oil go up to $72 per barrel, which are levels that we haven't seen since last September. So that disruption in supply has definitely affected the price of oil. Another disruption is Kazakhstan, where there is a fire and power outage as well, which disrupted their supply. They are the 12th largest producer, and they produce about 7.1 million barrels a day. But that, with their talks of a restoration this week, so that might then bring the price of oil back to levels that we were seeing in previous times.
Right. And in terms of currencies today, what's your observation?
So in terms of currencies, the rand is pretty much trading cautiously, but it's very strong from what we've seen from Monday, from the start of the week to the levels that we are seeing now, trading at around 15.9 and going to levels of about 15.8 earlier on. That is, as indicated earlier, is driven by the price of precious metals, as South Africa being an exporter of most of these metals. But yes, so in terms of currencies, the rand is doing quite well. Against the euro, though the euro has gained a bit of strength at the back of the weakness that we are seeing in the dollar.
Toba, thank you very much for your insights. That was Toba Kameze, Treasury Sales Manager at Nedbank, sharing insights on today's trading. Otherwise, this has been Nedbank Business Watch. Thank you very much for tuning in. Until the next edition, take care.
Make better money choices. Choose a bank that takes your money seriously. Business Watch was brought to you by Nedbank.